Good afternoon. This is Ken Long from Tortoise Capital Management with a review of charts of interest, the usual suspects for June 25th, 2011. I'm using the same markup as I did last couple weeks, which includes highlighting the price action from the previous swing high in blue, going back really to the 1st of June, and then evaluating the PPO oscillator, percent performance oscillator, using parameters 10, 20, and 8, which mirrors what I use on MACD histogram, but allows us to make a fair comparison between different instruments, and rating them as green for good, yellow for sideways or indeterminate, and red for weak. So let's see, Alcoa, straight downward trend, last 5 days, choppy sideways with some buying pressure and a couple dojis, failure to fell further. That looks very good. I'm a buyer at 15.5. MACD histogram or PPO has opened up. Boeing is almost the other side. So it was sideways and then harsh sell-off to a couple dojis. PPO is just opening up to the downside. That looks negative. I'm short. I'd be short at a break of the low, of the swing low of that doji. Caterpillar, much like Alcoa, sell off, found support, back to the 20. PPO moving up. Cisco, harsh sell off, tried a little bit of buying pressure and the jaws of PPO opened up, but now 2 days of failure to follow through above the 20. So that's going to be an auto short below 15. Chevron suffering from the fall in oil prices. PPO just rolled over. Ag, sideways really, price action, but the little sell-off on Thursday is kind of problematic. Now, if that could be almost considered a bottoming tail, a big gap down below this long sideways market to shake out the weak hands, followed by a powerful buying day, failure to fell further on Friday, and only less than a 50% retracement. I would be tempted to go long this at about 32.25 at the first sign of strength. In fact, I would be using day one frog techniques on this one and buying early strength, betting that candle on Thursday was a shakeout. Blended commodities, big fail, closed at a new low, and those two bottoming tails are indication of the final support levels before that crashes, and that's responded to the weakness in energy. PPO, a clear downward trend. EFA kind of sideways in price, sideways on MACD histogram. I think just to me the weakness in Europe though is in Greece, it's just not good. I'd be short this below 56.5. EPP sideways, not as weak. EPP sideways, not quite as weak as Europe, but still nothing to write home about. Very low risk appetite, you can see from the very tight sideways pressure here. I think they are followers waiting to see which way the world markets are going to go. Looking at Brazil now on page 2. Not so much. I'd be short below. This is pure almost sideways. The only thing that's even remotely possible on this is on the PPO is if it crosses over here, above 71 and can get through 72 and 3. Sure, then that starts looking good. But and then this would be seen as a double bottom because PPO is ready to cross over, slightly below the line. I like the potential there for tactical trading only. Hewlett-Packard, failure to fail further. I think I'm treating that as the swing low at about 34. It's got to break through 20, the 20-day moving average. If it gets above 35.5, it starts looking pretty good. PPO has flat for a long while and now just opened up, targeting 38. That's a washout pattern in here and any buy from here would be a washout continuation. Latin America about in the same boat as Brazil. The uptick I like here, the higher lows, and PPO starting to open up. Intel pure sideways. It was a strength leader. The 20 has crossed below the 50. 50 has not really been dragging it higher. It's got a fish or cut bait here pretty soon, and that's why I rated it as yellow. IWM, definite some trader interest in this on the long side. 79.30 has been a really strong intraday support. This was a huge 3 sigma intraday uptick move here. There's some strong interest in buying support levels, and PPO was rolled over and starting to move up. Johnson & Johnson, kind of a surprise. This was the strength leader and broke down out of its channel. It's held the 50, but barely. There's a lot of buying pressure down here, looking at, I think, 65 as a value play. We'll see if that holds up next week, along with the main idea of the defensive sectors. It's got to hold at 65. If it does, that's going to be seen as a really good entry level on what has been probably the best stock in the Dow. Kraft, a defensive play, held above its 50. So I like that. Higher lows. MACD histogram is on the right side of the zero line there, and crossed over to the upside. It's got to continue to march here above 35 though, to really get our attention again. Coca-Cola maybe putting in a double or triple bottom here at 65. MACD hit, but it's got to do it pretty quick because this little uptick was jeopardized by the last 2 days of selling. Defensive play, tactical traders delight right there. Look at the size of the intraday volatilities. The last time it did that over here in early May, you got a nice run up. That's sort of the argument for staying interested in swing trading in Coca-Cola. McDonald's in pretty good shape here, although the last 2 days were nothing spectacular. It did hold above the 20 and above the 50. The 50 is still solid. But MACD histogram did close, or PPO just closed, so that's why I rated it as yellow. If this is the pause that refreshes, this will be seen as a higher low here at 82. Moving on now to page 3. Mid caps have been the strongest. You can see why. A nice solid base here around 170. 4 days of buying pressure, closed right near the 20. If you can get through the 50, it's all smooth sailing again. PPO has opened up. Microsoft doing better than some of the other techs. Orderly pullback and held support at the 20. I like Microsoft right here, and so does PPO. Silver testing the bottom of this sideways channel. This could be a good value play. Nothing to clearly the speculation's gone. And now it's just a good precious metal play and a store of value and a hedge against inflation. That's not all bad. I like it at this price levels. I think any time below at 35, I'm looking to be a buyer on tactical trading. I'm keeping that core position and then trading around a tactical piece. Oil suffered from the release of strategic reserves. Bad news for oil is good news for the business cycle, but we'll see how long-lived the strategic reserve boost helps it. Helps the price anyway. VIX still showing concern about Europe. The PPO is green and open. Still very volatile, tradable intraday, but to caution the overnight holders. Walmart found support around 52.5. But it's testing that right now. If it holds, the combination of being a defensive play in a defensive sector may make this an attractive entry level on a great company that institutional money has to own. Looking at the XL series, materials doing a little better. I think they have found their support level around 37. I think you saw that in Caterpillar, Home Depot, and Alcoa. Energy suffering on the price sell-off there in oil. Financials just brutal. But still, 1475 looks like a support level is forming. And I think you can buy it on a crossover of 15 right now. And PPO agrees with us. Industrials in fairly good shape, much like Alcoa and CAT. Could be a turning of the business cycle, a lowering of energy costs. Maybe that's what that is. Technology, PPO is in the green. It held support above 24.5. This could be a nice long run if we could see technology kicking in, but boy, it sure has been heavy sledding. Consumer staples, this is really remarkable to me, that one-day sell-off in what has been absolutely the best sector. And with MACD crossing over right here, I still rate it as slightly yellow. This could be the all-time great entry price at $30.75 if we get any kind of sustained move here. Utilities have been very, very tradable intraday. Look at the size of the daily bars. Even though on a weekly basis it's not going anywhere, boy, has that been tradable in the first half hour. Healthcare, slightly better than the staples have been, but also an opportunity to buy, or to start trading the best, one of the, the 2 or 3 best sectors in the U.S. Consumer discretionary, surprisingly better shape than staples. Well, things are tradable even if we can't fully explain why, and that's where I'm at with this discrepancy between staples and consumer discretionary. I mean, if anything, you would think that would be the perfect storm for a pair trade to go the other way, long the staples and short the discretionary. I'll leave that to your judgment. Finally, ExxonMobil rolled over and broke down on the sell-off in oil, and a leader to the downside among energies. So those are the charts of interest. Keep your powder dry and your risk measured.